Carl, thanks so much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour, trading stocks at record highs. What are the best moves to make in this market, which despite today's pullback remains as resilient as ever? We will ask the committee. Joining me for the hour today, Josh Brown, Stephanie Link, Jenny Harrington, and Jim Lebenthal. We'll show you the markets here. We are red across the board, as you probably know by now. We did have, though, the Russell 2000 posting its 9th day of gains in 10, S&P and NASDAQ coming off record highs. And Steph, you have the president talking about and threatening more tariffs, and UBS really hits the nail on the head today. The remarkable resilience of the U.S. equity market persists. And that's what the story is, and that's what the story remains. The question is, can it continue to do that? It can.
Yes.
Tell our viewers why you think so.
Yes. The market is resilient despite the noise with regards to tariffs, with regards to the geopolitics, with regards to the Fed and the unknown there. And at the same time, we're growing at 2.5%. And 2.5% GDP growth equates to something like mid-single-digit total revenue growth with a little margin expansion, which is what I expect. I think you're going to see 10% earnings growth. The market expects 5%. I think that's going to be the catalyst going forward. And I want to be overweight industrials, which I am, financials, which I am, and now in discretionary, we're going to talk about housing in a little bit, but I want to be overweight housing.
Okay, so Josh, Michael Hartnett at B of A he always has a good way of putting things. I'll say that. And today he says the title of his note is No Pain, No Pain. He says the options volatility index, a.k.a. the VIX of bonds, plus the VIX itself equals the best taco index. Lowest bond and stock volatility since February 19th equals no policy fear, equals stocks and crypto liking the Trump policy flip from detox to gorge, see ARK Innovation versus Berkshire Hathaway, going all in until the 30-year bond yield jailbreak levels, as he calls them. In the UK, it's 5.6. In the US, it's 5.1%. Japan, 3.2. Until all those levels are breached, you do have a jailbreak, and we can throw the 30-year up to just give our viewers an idea of where it is today relative to the Hartnett level. And I'll toss it to you to tell me what you think about what he has to say.
Right. So the premise is if bond yields, real bond yields, far out in the curve break out above those levels, it signifies the big conservative money is truly concerned about the effect on the U.S. economy, which would imply this is where the market will actually start to believe these tariff headlines, and the taco thing will come to an end. I think that's what he's saying. I think that's as good as any other possible indicator that we might have. I had a conversation with Ryan Dietrich from Carson Wealth yesterday about this very subject. What are the things that you look at when the stock market volatility spikes to calm yourself down and to remind yourself that this is all fake and it's mostly for show? Credit spreads didn't blow out in April, Ryan reminds us. That was a really good tell that nobody was taking this that seriously away from the stock market. Another thing that I looked at, foreign stocks. I don't even think most people realize what foreign stocks were doing while these ridiculous tariff numbers were first being floated. They were rallying. The international investor was laughing at the notion that we were going to have 150% tariffs on China. So there are a lot of things you could look at. I don't hate this jailbreak idea, looking at longer dated yields. I think the most important thing that you have to ask yourself in the year 2025, if you want to be invested in the stock market, which is going to have a longer lasting, deeper, more profound impact on the way we live our lives in the year 2030? Will it be the AI revolution currently underway, or will it be the things that the president puts on Truth Social in the year 2025? Like which of those things will be the driving force behind profit margins, earnings, employment, et cetera? So I think most people in the stock market at this point have settled on the idea that AI will be much longer lasting, much more profound than whatever tariff rate Canada has to pay us for the next couple of months. And that's where I stand at this point as well.
Okay, Jenny, I mean, the market's resilient. We know that. And we know that buyers are pretty eager to grab the winners. The flow show at Bank of America tech and financials buying. Tech, the largest inflow since Liberation Day. Financials, the largest inflow in 6 months. That's interesting in and of itself. So it gives you an idea of what people continue to buy.
Right, so that's what people are buying, but there is a broadening out, and we can't ignore that. It's really interesting if you look at the S&P equal weighted index, it's up 7%. That's just in line with the S&P itself. I think the way we're thinking of it at Gilman Hill, and I'll just give you exactly what happened yesterday. We have a new client account, and they said, look, I want to work with you. Choose whichever one of your strategies you think over the next year is going to make me the most money. So we could choose from the dividend income, international income, or the disciplined growth. And if you'd asked us the same question several months ago, it would have been probably the international strategy, maybe some of the dividend stocks because we thought they were really undervalued. Today, we actually said to this client, okay, we're going to do 100% in our disciplined growth strategy. But that for us is not the S&P 500. So it's stocks like Schwab, Freeport-McMoran, TripAdvisor, GXO Logistics, United Rentals, Cisco. And so when I think about the fact that the equal weighted composite is actually up as much as it is, I think there is a lot of money that's also going in to, to things other than the Mag 7.
And you think that's going to continue?
I think it should. And I think it should because when we look at relative growth rates and we look at the Mag 7 and how it outperformed the rest of the S&P, and from an earnings growth perspective, it outgrew the rest of the S&P by 35% the last 2 years. That growth differential is narrowing. I don't know how much it's going to narrow by. JP Morgan put out some great estimates in their guide to the markets where like this year it looks like I think it's a 9% differential. Next year it should be a 2%. Probably it's going to be wider than that, but the differential is narrowing. So you have 493 companies that people are saying, hey, you know what? Earnings are pretty good here, and valuations are also compelling. They're not more compelling, they're just also compelling. And so when we look out with respect to opportunities for the growth portfolio, there's lots of non-Mag 7 that are simply compelling.
I'm with Jenny on this. I think there is a lot of room to be a stock picker here. And a lot of people may be looking at the markets and they're saying, oh, it's 21, 22 times earnings. How could I possibly get in? You got to pick your spots. You can pick sectors, and don't everybody jump on me at once, but the healthcare sector has a lot of attractively priced stocks in it.
Well, the whole point, when you look at, to your point, I'll give it back to you in a second, but that's why Jenny's talking about those stocks.
Yes, that's
because the multiple is completely different of the equal weight and stocks like that, rather than looking at the S&P 500, for which is so top-heavy of tech and some financial stocks and some big industrial stocks, too. There's all these others that are waving and saying, hey, maybe now is like the right time for a big catch-up trade.
Well, yes. And maybe, Scott, it's maybe even more than a catch-up trade. Maybe it's fundamentally based. Again, I was talking about healthcare stocks, a lot of pharmaceutical stocks that trade at mid-teen multiples with 3 to 4% dividend yields. I can pick off stocks. I can look at something like a Lockheed Martin in industrials, which hasn't performed with the rest of the sector. I mean, there are a lot of places you can go. It's not, what I'm trying to say, and I think, Jenny, you were trying to say this, it's not a market where you have to hold your nose to buy stocks.
So you have to hold you're insinuating you have to hold your nose to buy the mega caps and the larger cap stocks?
Some of them.
If anything, you haven't had to.
Well, from a valuation point of view, which is where a lot of us on the desk, and especially me, reside, if I were to say, look at a Microsoft, I would have to hold my nose to buy that here at this multiple. I wouldn't, however, and again, this is to the point of it's a stock picker's market. If I looked at Alphabet, I wouldn't have to hold my nose. NVIDIA, I wouldn't have to hold my nose.
But there are a lot of stocks in the area you guys are talking about where people have to cover their eyes.
Like
and
Walmart.
Buy. Not because of the valuation, but because it's harder. The risks are seemingly higher in those kinds of stocks relative to the NVIDIAs and to the JP Morgans and to the Caterpillars.
Okay, Jenny, give me just one shot at this. Okay, I see your point. Take a look at Delta Airlines yesterday. It is hard to own something like Delta Airlines until you get that earnings report that says the fundamentals are intact. And that's where Stephanie, Jenny, and I reside, and Josh, too, is looking at the fundamentals. And a stock that hasn't performed well but has the fundamentals intact, you're just waiting for the market to recognize it.
But on the other side of the Delta trade, like I think you need to hold your nose to own a Walmart, which trades at 30 times earnings, right, has decent growth ahead, but that is a really rich multiple. And I don't think that multiple is justified. I think there's a tier of stocks kind of beneath the Mag 7 that have been floated up with the broader market. So there are stocks out there, but it really emphasizes Jim's point, if you can be a stock picker, there are compelling combinations of valuation and earnings out there, and it's not I don't think the spotlight will shine entirely on the Mag 7.
No, but like when, Jeff DeGraff of Renaissance Macro was on with me on Closing Bell the other day, the charts are pretty clear in the story they're telling, Steph, of stay with what has really worked well.
Yeah.
Don't make it harder on yourself than you have to, because a lot of the stocks that are not specifically the names that are being mentioned on this desk, but the kind and the size aren't confirming really anything yet. Okay, so maybe they've had a handful of days that look pretty good. Okay, well, that doesn't tell me anything as to where the trend is. The trend still looks great for the ones that we're talking about and the ones we talk every day. A concentrated conversation about the most concentrated parts of the market.
I think you can do a barbell, and that's what actually I have been doing. So on the one hand, I can justify Amazon being at 14 times EBITDA, and historically it's at 18 times. I can justify Meta, it's at 17 times EBITDA, that's in line with its average, but the growth of both of these companies is so substantial, right? We haven't even touched on the AI story and all of what that means. And by the way, Meta is the only one that's really monetizing AI, right, with their ads. So I can, on the one hand, definitely own those stocks. But on the other hand, I do think that some of these industrials are a backdoor way of playing AI and data center. I love the financials, especially because the deregulation, I think, is so unappreciated. And I think that's a multiple driver. And so that's why I like that. The one sector that I'm wondering if it's going to have legs is this whole housing trade. But they're so incredibly cheap. And the numbers have been de-risked. So I can see both sides. So that's what I'm doing with my portfolio.
Let me give you a good example.
Go ahead.
And I'm going to throw it to you on this.
Please.
Qualcomm. You would probably, in the list of stocks that you would say, well, you can buy a this and you can buy a that.
Yeah.
And you can buy a Qualcomm, for example. Well, okay, the target does get raised to 185 today, and it was reiterated by at TD Cowen. But to the point of making it harder than it might otherwise need to be, the stock's up 2.5% year to date.
God,
I'm looking at a lot of green over really reasonable periods of time, and this one doesn't show that.
I love the setup,
So you,
okay? And
but
this
that,
goes
to
back,
my point of like, you're going to make it real hard on yourself.
No, but
tell me 10 lines about why I should buy it.
Get ready. Here it comes. I love this setup, and I love the point you're making about is this harder or not? It depends on what your investment style is. Everybody knows I'm a fundamental analyst. I'm looking at this stock at 13 times earnings with about a 3% dividend yield, no debt on the balance sheet, and why is it so darn cheap? Because everybody thinks it's a cell phone manufacturer. No, it is not.
And the market's smarter than that.
What?
The
market isn't. No, it isn't. No, it is not, Scott. And give me a little runway on this, okay? If it were that smart, why would Wynn have languished so long to pop now? Why would Citigroup have languished as long as it did at 60% of tangible book value? I'm not getting snippy with you. I'm getting snippy with the market. That was ridiculous, and now it's approaching tangible book value. The market is not smart.
Josh,
That's a big statement.
You have a thought on that? On the idea of I know you follow DeGraff stuff too, and just on the concept itself, yes, it may be a stock picker's market. But there's a reason why the stock pickers in this market keep going to the stocks at the top of the list.
Yeah, no, this isn't hard. Every sector, cap size dominates the return tables. Every sector. This is what's driving the market, and not just this year, last year. This is the story of the last 15 years. And every once in a while, there's a relief rally in value. Every once in a while, there's a relief rally in small caps. We get these 6 to 8 week periods, 8 weeks if you're lucky, where did you know the Russell 2000 is outperforming the S&P 500 by 200 basis points over the last 9 days, and people get all excited. But the mean reversion is not the trend. It's always the counter trend. And just go down the list of every sector. So we're talking about financials. How many conversations have I had with the panel on this show over the last 10 years? People telling me JP Morgan is not the right one to buy because A, it's already the biggest market cap, and B, it's already the most expensive. Well, guess what? The stock is annualized at 28% a year over the last 5 years from a starting point of being the biggest and the most expensive. So that didn't end up mattering at all. It's actually had a better return than Alphabet, than Amazon, than Microsoft, than Tesla, than Meta, and then Apple. Every Mag 7 stock, JP Morgan has outperformed other than NVIDIA. Why? Not because it's big, not because it had a premium valuation. It's the better company. The market is smart. Investors know what they're doing. They price assets according to quality and to the momentum and the earnings growth. They're not idiots. I have the same conversation over and over again with the largest, biggest companies that continue to work. If you want to play this like mean reversion thing where like now is going to be the moment where small caps go on a run, okay, I hope you're good at timing because A, really hard to know when it's going to start, and B, you know it's not forever. It's only a matter of time before it ends.
You have a rebuttal, Jim?
I don't like that game. The game.
All right, that's cool. I mean, I have just side note. I've owned J.P. Morgan for more years than I can count, so I'm with him on that. It's not a pushback. It's what is my belief is let's take Citigroup not as an alternate to J.P. Morgan, but as something that can be owned in addition to J.P. Morgan. If you look at the 5-year track record of Citigroup, it pales to compare it against J.P. Morgan. On the other hand, if you look at the 3-year track record, it's right in line with it. I'm not rebutting Josh. What I am saying is that as a stock picker, I see that 3-year track record of Citigroup that has just now got it back to tangible book value. Let me just finish.
Oh, go ahead.
And I see more years ahead of that gain, given the dividend yield, the share buybacks, the earnings power, the turnaround story. So I'm taking nothing away from what Josh is saying. I am saying you can find stocks where, in my opinion, the market doesn't know what the heck it's doing.
Okay. I find the next part of our conversation a good debate also around sort of where we are and where you guys are expressing your views in some respects on where you think we're going. Jim trimming Oracle, okay? Stephanie buying more Vertiv. Stephanie Link leaning into strength. Jim Lebenthal running from it.
Scott, I love you. I'm
running
sorry.
from it.
Okay, I've been in the stock 2.5 years.
Okay.
I'm up 150%.
Okay.
It's become a very big position. I'm trimming the stock. I'm going to sleep like a baby tonight trimming the stock. I'm still going to own shares. However, we're entering earnings season. We all know that in earnings season, something gets stupidly dislocated. I have been fully invested. I need to have some dry powder. If I want to buy low, I have to sell high. That's the name of the game.
So what's interesting about this in and of itself is that both stocks are up the identical amount from the April low, 87%.
That's funny.
An unfair cherry
No, it
pick
isn't.
period.
Funny.
It is not. They're based on the moves. I'm not cherry picking
He's
anything.
up 150% over a couple years.
So what? So what?
And I'm new. And I'm new.
You're fully in the throes of a bull market.
Steph,
These are
what's
two.
Vertiv up?
Hold on. These are two stocks that are at the epicenter in many ways of what this whole bull market and record-setting run are about.
Fine.
AI infrastructure. Oracle right in the thick of it. Vertiv, obviously, in the thick of it, leaning into strength in stocks that have worked well.
All right, so I'm new to Vertiv, right? I have been in Quanta, in Eaton, in Rockwell, in GE Vernova. I love the theme. I've been pounding a table for 2.5 years on this theme. Vertiv is the very best in the business, and it got away from me. It was always too expensive. And so this stock is down 25% from its highs. Yesterday, it was down 12% on the rumors that AWS was building a cooling system. I'm like, you gotta be kidding me. These guys, Vertiv, have an end-to-end solution and services and a huge install base. And so down 12%. I averaged down, and I'm going to continue on any weakness because I still believe very strongly in this decade-long theme. By the way, Dave Cote is a rock star. He's the executive chair. He has a great CEO as well. So I just wanted to find best in class on sale, and that's what I did. That's actually my style. I kind of feel like the three of us, really, right? We try to find quality, and then when it gets hit for whatever reason, if the valuation makes sense and the fundamentals are still strong or getting better, that's what you want to do. That's how I invest.
By the way, Vertiv's only up 9%
Yeah, that's right.
year to date. You can't necessarily judge things on such a short period of performance and a big burst that you've gotten from it. But I just think it's a really interesting way that you guys are looking at two winners in your books over the last 3 months. One trimming, one again seeing where strength is. and riding it.
I'm not going to damn Oracle and say it's too expensive. I mean, you know what I think is a good analog here is Broadcom, Steph, and I know you've been in that for a long time. That multiple expansion in Broadcom went from the low teens to the low 30s. Frankly, that's what Oracle has done. And I do think, geez, am I maybe trimming this a little too soon?
Are
But
you
Scott,
trimming
it just
Broadcom?
got too big.
Are you trimming Broadcom?
Not yet, but I'm close. It's 7%
Okay.
of my. It's 7%
I mean, you
of my
think about
portfolio.
it.
I might come on next
Well,
week and
it's
say I
7% of the portfolio.
It's 7% of the
Is Oracle
portfolio.
7% of your
6%
portfolio?
of the portfolio. I mean, look, that's what. Oh, did you give
Go
me
ahead.
an eye
Go
roll?
ahead. Just
You gave me an eye roll.
a
That's
little
what
bit.
happens.
A mild one.
Wait a second. I bought the stock February of 2023. First purchase at $86 a share. It's at $235 or whatever it is now. I mean, when that happens, it
No,
grows
I'm
in
not
size.
hating on anybody for taking profits in a stock that's up a lot. I just think it does sort of tell a little bit of a story of psychology of what's happened in this market over the last 3 months.
Yeah.
In
There's
and of
great
itself.
I think there's great. Listen, I'm not hating on Oracle. I think there are opportunities
Well, you
right now.
trimmed, you didn't sell,
I
right?
toyed with the idea of buying some Delta today.
You sold
I might
one.
do-
You sold another name the other day that was up a
What did I
lot.
sell?
I don't
What did I
remember what
sell?
it was, but you sold it. You did.
Shoot, I can't remember, Scott.
I know you did. I just can't remember the
believe
name.
you. I take it as
Jimmy.
gospel.
What?
It's entered in the record.
Hold on. One of our producers tell me. What was it?
What did I sell?
Did you sell MP Materials?
I did. Oh man,
No, I was thinking of something else. There was one last week. I can't remember. You sold something
Somebody
recently too.
tweaked
Something
me
else.
yesterday on MP because it went to 45 and I sold it at 33. Listen, folks, and listen closely. It was a $10 stock a year ago. Nobody give me any attitude about selling stock that's up 200% in a year.
All right, so let's talk about one more name that has been a massive winner. We've talked about it at least 2 times already this week because there have been a couple of calls on it. I think there were downgrades too. Not to sell or anything like that, but neutral because the stock has run so much. It's Netflix. The price target today goes to $1,500. I don't think it's the street high, but the chase has been repetitive, let's just say. Stock exceeds expectations. Analysts ups price target. And wash, rinse, repeat. And there's their stock at $1,200. Needham says it's going to 15. Josh Brown, Netflix.
Yeah, so this name has been on my best stocks in the market list for a long time. I pulled the trigger. I'm up a lot, but I'm not selling, and I'm going to tell you why. You have a name right now just above its 50-day moving average, but in the midst of an 8% pullback from the all-time high. This is the largest drawdown that Netflix has been in since April, and it's worse than the stock's average drawdown during that entire time. The average pullback for Netflix has been about 5%. So this is a little bit of a larger pullback. Why are people selling the stock? Maybe it's because earnings are coming up and you know people are a little bit jittery because of how much the stock has already rallied. I really don't know. I don't think it's terribly important. What I do think is important is this is the type of name where if you don't own it and they, for whatever reason, put out, here's the expectations, $11 billion in revenue, which would be 16% year-over-year growth, which is incredible. Earnings of $7.08, that would be a 45% jump year-over-year. If for whatever reason, let's say they do like 706, and the stock market, acting the way the stock market does, chooses to rip 11% out of the share price in Netflix, that's where I would be buying it if I weren't already long. So that's the way I would think about going into this report, not necessarily chasing it into a news event like that, but just saying like, if I get another crack at it, I want to get long. So you're at an 8% drawdown now. If you end up in a 15% drawdown from the high in this stock, I think you're a buyer, not a seller.
All right, so Bitcoin hitting higher highs, traded above 118K for the very first time today. Let's bring in Tanea McKeel, who's been following that story. What can you tell us?
Yeah, Scott, quite different from the May 22 high, which was more of a blip at the front of a 2-month consolidation period, as many investors called it, despite a 15% gain. The rise started this week after the Fed minutes on Wednesday. That triggered a massive wave of short liquidations that pushed the price up. I think the biggest wave this year, more than $650 million liquidated in the past 24 hours. Meanwhile, Bitcoin ETFs seeing their biggest day of inflows this year yesterday at more than $1 billion. Now, investors, of course, expected new records in the second half, given strong institutional demand and regulatory tailwinds. It's hard in my conversations for a lot of investors to identify downside risk, and historically, July is a strong month for Bitcoin. It'd probably take a macro event to hit or suppress prices. Macro catalysts, of course, are typically fewer in the summer, and investors tend to pare back their risk. I'd watch the Fed meeting at the end of the month, knowing how split Fed officials are and how aggressively to cut. And of course, ETH coming back to life, so much so that we have this new crop of ETH treasury stocks for investors to play. ETH outperforming Bitcoin the last 2 months and really roaring this week. ETH ETFs saw their second biggest day of inflows yesterday. Scott.
All right, Tanea, thank you for that. Good setup, Tanea McKeel. Josh Brown, what do you think here?
I'm long Bitcoin. I don't really have a target or any idea of where it's going. I've been involved for a really long time, since about 3,000, I think, and intend to stay. Recently, I've taken a much bigger interest in Solana. Solana probably gets an ETF at some point between now and the end of the year. This will raise awareness and drive a lot more people to learn about what it is and why it matters. The most important thing the viewers need to understand about Solana is if you believe in the tokenization theme, that we're going to start tokenizing everything from farmland to buildings to the stock market, etc. This is the best vehicle because of the amount of throughput, the amount of transactions you can do every minute in Solana is higher than any other layer one. So that's the first thing that people need to understand. The second thing is the more activity in Solana, the higher the amount of burning off tokens, which means decreasing supply. So this is the way that I would think about the opportunity going forward in crypto. Still long Bitcoin. It's hard to believe Bitcoin could 1,000x again, whereas some of the smaller tokens have more of a chance to be bigger winners prospectively looking out forward.
And you feel like there's enough, I guess for lack of a better word, bandwidth, investor bandwidth, to focus outside of the pure play Bitcoin itself?
You know, you can't do, what I'm describing with Solana, you can't do with Bitcoin. So stable coins are already a gigantic asset class in and of themselves. They have nothing to do with the things that you can do with Bitcoin. They have their own use case, and people are putting money into stable coins for different reasons than they might put money into another type of crypto. So the number one thing that we need to do, now that this is a maturing asset class that's got both government support and institutional sponsorship, we need to stop thinking about these things monolithically, like it's all one trade. That's a very primitive way of thinking about crypto. Now we need to start thinking about use cases that actually have a chance of becoming real. And again, one of the big drivers of Bitcoin last year was the introduction of the ETFs. There is no Solana ETF. There's a trust that you can buy off market, but you cannot buy this in a brokerage account yet. I think that'll come given the Trump administration's stance toward the asset class.
All right, good stuff. All right, Josh's final trade is Uber. Jimmy.
Delta Airlines.
Zimmer, ZBH.
Boeing.
All right, the exchanges now.
That was Josh Brown and guests on the Halftime Report on Friday. And in this episode, what we're going to do, this segment of the video, we're going to go over the stocks that they talked about. My name is George. This is Blue Cloud Trading. Before we continue, just to let you know that I just posted a new members-only video. If you're interested in watching that, it's a little over an hour, it's about an hour and 16 minutes long over the weekend, where I go over my entire portfolio. You can access it by scrolling down on my homepage here and clicking on it to find out more information on how to get access to it. All right, so let's get into the stocks list that they talked about. Now, if there are stocks within that list that are within the portfolio, those are not stocks or ETFs that I'll cover, but there's about 21 items here. You can see the list of ETFs and stocks right there that we're going to go over. We're also going to take a look at the SPY, the QQQ, the DIA, and Russell 2000. These are the really important index ETFs, as well as Europe's FEZ. And we'll take a look at some of the Mag 7 stocks that are not in my portfolio currently. All right, so let's get into it. Now, before we get started, though, one more thing I want to mention is that the markets on Friday, as you can see, they closed, all indices closed down. You can see, for example, that the Dow Jones was down 0.63%. It dropped and just stayed pretty stable the rest of the day, but it was down 0.63. The Nasdaq was down 0.22%. The S&P 500 down 0.33%, and the Russell 2000 was down the most, 1.38%. Let's take a look at that heat map. We've got the one-day performance here, and what you'll notice is that Google, Amazon, Tesla, Nvidia, Microsoft were up, but look at the other companies like Oracle. Palantir was down slightly. Okay, Palo Alto Networks. Yeah, a lot of stocks were down on Friday. Once again, Visa, MasterCard, American Express was down, PayPal. You can see the energy stocks were pretty strong. And some of the real estates, like REITs here that you see on the right-hand side, did pretty well. What about the 1 week performance on this heat map? We can take a look at that real quick too. There we go. So you can see that. Yeah, I mean, the software stocks did not do so well actually for the week, right? Most of them were down, as you can see. Software and applications, financials didn't do so great. Asset management did. Some of the healthcare stocks did well, and energy was up this week. Now let's look at the group screen, or what this shows us right here is the sectors. And for the 1 day performance on Friday, energy was up the most, 0.6%. Healthcare, financial, technology were all down, as you can see there. And for the 1 week performance, energy, industrials, and utilities and basic materials were up. Everything else was down, including technology for the week, which is interesting. For the 1 month performance, though, technology has been a clear leader, up 6.47%. Industrials, energy, financials next. And then consumer defenses are down 1.4%. So let's go ahead. And one more thing I wanted to also show to you guys is an article that came out here in the New York Times about the latest tariff threat risks a deeper damage to Europe's economy. And basically, here's what's expected, really. Now, the European Union, already weakened by an intensifying trade war, faces a new threat after President Trump said on Saturday that he would impose a 30% tariff on goods from the European Union. Economists say that a move could worsen the region's struggles in the months ahead. And so the next step here is European Union officials meeting in Brussels on Sunday, today, as I'm recording this video, decided to hold off on imposing any countermeasures and continue negotiations in hopes of reaching an agreement before the newly announced measures take effect on August 1st. Now, you may have remembered me in previous videos talking about this being the most important date to keep an eye on. August 1st, what's going to happen? Will these tariffs go into effect or not? So until this date comes up, we really can't make any predictions here because everything is so up in the air, Anyway, let's get into the stocks now. So we're going to look at the indices first. Let's look at the SPY ETF. Still holding up above that 613.23 level. We're using the Ichimoku indicator. That's going to help us identify the strength of the trend. Prices above the moving averages here, and the Ichimoku cloud still very strong. That's the weekly chart. Here's a daily chart, also looking pretty good, right? Has not broken down under the Tenkan-sen quite yet, even though it did drop 0.35% on Friday. The QQQ ETF also looking pretty good, down just 0.23% on Friday and holding up above the moving averages still. The Dow, on the other hand, was down 0.66% and actually crossed and closed under by a very small amount. Okay, literally, the closing price on Friday was 443.57, and the Tenkan-sen is at 443.76. The green line is the Tenkan-sen, or 9-period moving average. The red line is the 26. So, we could see it pull back some more at this point on Monday, potentially down to another 2% to the next level of support, which is the Kijun-sen, the red line. The Russell 2000 pulled back a little. Okay, that's the IWM ETF, and that was down 1.38%. So it's also still holding up on the daily chart. But again, if we look at a weekly chart, unlike the SPY and the QQQ and the Dow, all right, on the weekly chart, the Russell 2000 is still stuck inside the cloud itself. And that's an important thing to take note of. Notice also the type of candle that formed right there. That's called a doji, that little candle right there. It looks like a little cross. What that represents is the opening price and closing price basically, at the same exact level. So the wick represents how far up the price went. The lower part of the wick shows how low the price went. And this is where it stalled. After a move up, when you get this type of reversal candle, there's a good possibility that it could pull back. I'm just saying, something to keep an eye out next week, right? And like I said, on daily chart, you can see it pulling back. It just literally gapped down on Friday, right? From that high there, where it closed on Thursday, it gapped down and then just continued dropping. And we can see that on a 5-minute chart. That's what a 5-minute chart looks like right there on the 11th. And there it was on the 10th, where it showed some weakness getting under that red line, the 26 period. Notice how even on the 5-minute time frame, this indicator is fantastic in, showing you when the weakness begins, right? And so it starts when price gets under the 9 period. Then you get more confirmation when the price drops under the Kijunsen, the 26 period. And then look, it dropped, came back up, found resistance at the Kijunsen, and then dropped some more. And now it's just going sideways here. And then it was basically stalling over here for a little bit and then dropped. Actually, also broke, it looks like to me, if I look, let's take a look at that. Maybe it's around that same level. So it's finding a little bit of support around that level, but on the 5-minute. But overall, we'll know more on Monday morning, obviously. Now the VIX actually jumped a little, 3.93%. I'm going to guess that has a little bit more to do with the fears that's going on with the tariff situation. So we might start seeing more and more of an increase in the volatility in the markets as we get through this. Look at this 5-minute chart that you see right here, for example. And what you'll notice is that that trend line on the 5-minute was broken. Okay, so we might have a new little uptrend established here. Let's look at the daily chart. On the daily chart, it is still in a very, healthy level of 16.4, the VIX. Okay, but, I'm a little bit concerned. The positive DI crossed above the negative DI. We'll see what happens, obviously, soon enough. And then FEZ, the Euro stocks, as I just mentioned, they're going to get hit. In fact, that article said something. Let me just take another look at that. It talked about another thing. EU economists recently downgraded the growth forecast for the 20-member Eurozone in 2025 to 0.9% from 1.3% predicted in late 2024. The European Commission, the bloc's governing body, blamed the impact of increased tariffs and the heightened uncertainty caused by the recent abrupt changes in U.S. trade policy and the unpredictability of the tariffs' final configuration for the lower expectations. So that could be part of the reason why you're seeing that happening there with the FEZ, the little gap down there. All right, let's take a look at the stocks that they talked about on the show. Now, what I've done here is I've highlighted with a little blue flag that you see right there, the strongest stocks and ETFs. I did a little analysis on all 21 of these right before making this video here. And the ones that don't have a blue flag, okay, there's something wrong on the technicals on either the daily or the weekly. But what I can say is that these ETFs and stocks, okay, are looking pretty strong technically using this strategy, the Ichimoku, which is a rules-based system, and it's a great indicator. I use it primarily to help me with identifying strong stocks. And in the members video, I also share I always share now 20 new stock ideas for this upcoming week that look really great, that may not even be in my portfolio, but look really good for potential rise this coming week. So consider becoming a member, guys. Hitting that join button, the subscribe plus button. Once you've subscribed, you can subscribe to join as well. Okay. So let's start off with XLK, the ETF for technology. And you can see the daily chart, very strong. Uptrend still, even though it dropped 0.44%. Here it is on the weekly chart, still looking strong on the weekly. All-time highs, really. Bitcoin. Here's an interesting one, folks. Okay, this one here just broke through this level, this prior high from January 24th of 2025. It closed above it this week. This was a really important week for Bitcoin. Josh Brown talked about it a little bit at the end of the show, and you can see that consolidation now, right? So now we've got probably going to see a lot more of an expansion taking place, in my opinion. What leads me to believe that is the fact that not only did it break that level of resistance, a prior high, but also you can see the positive DI is above negative DI. ADX is moving up on the weekly. And on the daily chart, it looks very strong too, right? So I like Bitcoin. Anyway, I added some Bitcoin to my digital wallet this last week. IBIT is an ETF, and that is another way to buy Bitcoin. And if you don't want to buy the Bitcoin and add it to your wallet digitally, you can buy the ETF. You can have some exposure to Bitcoin and its rise. It's been performing really well for the year. I mean, let's take a look at that real quick on FinViz. We can take a look and type in IBIT. And we can see how it's performed 12 years and year to date, right? So, I'm sorry, we can see for the month, 12 months. So, performance for the year, 103.91% is the return. Performance year to date, it's up 26.69%. Okay, it's very well adapted now. A lot of institutions are using it. You can buy it anywhere. Fidelity, Charles Schwab, doesn't really matter. These ETFs can be purchased anywhere now. Anyway, and then ETH is also doing pretty well, but ETH is not in the list here yet. I'm going to show you. I'm going to do the technicals on that in a second. That's Ethereum. We're going to look at that one, which was up 6.73. So yeah, I like IBIT. Okay, it's broken through the levels. In fact, that level right there of 63.70 was broken on Thursday, July 10th, and you can see the big expansion that took place. Why? Because, as I've said many times, when price can break through those levels of resistance, then there's no more, the shorts come out, basically. The shorts will only stay in that trade until their levels are broken. And that level of 63.70 was broken. So it's a short squeeze. Boom, it pops. And look at that volume increasing. All right, MP is MP Materials Corporation. Now, I might as well share with you now that I've closed out of that position. I closed out of that position on June 20th. I had added this one back on June 16th, and you can see a little trade there on the daily chart. I made a 21.1% profit on that one. I was lucky, not always that lucky, where price, that was the right time to get out because it did drop, and it dropped about, from the high there, it dropped about 23.6% in 19 days following my exit from the position. But unexpectedly, the price also just gapped up, right? So it was up quite a bit on from Wednesday. Okay, on Thursday morning, it gapped up from the 29.72 level. Right now, it's up over 50% from these levels here. That's crazy. Problem is, on the daily chart, and I did some analysis on this in the members only video too, since it was one of the stocks that I was requested by a member. We're getting these reversal candles here. We got that right there. That's called a spinning top, and that's called a shooting star. And you might be coming onto this channel for the first time. You're probably like, what is this guy talking about? Shooting stars and spinning tops. What is that? Well, it's a Japanese candlestick pattern, and it helps us to understand what is happening. So when you're looking at a Japanese candlestick, what you're looking for here is there's the opening price, okay, and the closing price. If it's a green candle, that's the body of the candle, the opening and the close. The wick represents how high the price moved up throughout the day, if it's a daily candle, and the low of the wick there shows how low it did before finally closing at that level. So there's the open, it moved down, started moving back up, got up to that level, and then finally, maybe some selling took place at the end of the day and it closed right there. The opposite occurs where if you got a red candle, the opening price is always at the top. Maybe it moves up a little bit, then finally moves down to that low, and then finally closes at this level. So if you're trying to understand candlesticks, this is a really great little candlestick pattern reference sheet. I've got a few. You can see here the bearish single candle patterns, like the spinning top. You've got that shooting star that I just talked about right there, long wick and small red body after a move up. You get the hanging man after a move up. You get some gravestone doji. Looks like a gravestone almost because it's a flat body at the bottom. And it's smart to learn about these if you're trying to get some insights on what's going on during each day in the price. It's gonna give you. Now, if you want this candlestick pattern reference sheet, you can get it for free on my Twitter page on x.com. You can find it Let me just show you guys real quick. Just come to the Blue Cloud Trading page here. Click on this right here, which says 9 more links. And then you can read a little bit about me. Scroll down, and then right there, x.com Blue Cloud Trader. Okay, you click on that. It will bring you to this page. I'll show you where you can find it. Right here under highlights. Click on highlights. Scroll down a little bit. And there it is. And there's also a patterns cheat sheet here too, which is very useful. All right, let's get back to where we were talking about. And I also post other things throughout the day, so you might want to consider becoming. It's at Blue Cloud Trader is my screen name there. Okay. Anyway, let's get back to what we're talking about. So there's that shooting star that I just talked about. It's a very negative candle. I would not be adding positions here, but it's jumped. It certainly has jumped, and so maybe you wait until, wait for this thing to pull back a little bit, get a more optimal entry point, and then it would make sense at that point. Still looks great on the weekly chart too. There's a weekly chart. Okay, it's off to the races here for this one. VRT. Now this is Vertiv Holdings. On the weekly chart, looks very strong here, above the cloud, above the moving averages. It was up 2.14% today. I like Vertiv. Okay, so that looks very strong right there. Oracle. We've got a Greystone Doji, but it's right on the Tenkan-sen. And so I like, this is still a very strong uptrend. That's why it's flagged blue here. Here it is in the weekly too. This is a reversal candle. All right. But overall, it's still holding on. Boeing. This was Stephanie Link's final trade on July 11th. And this one looks pretty good too on Friday. And here it is in the weekly chart. Okay, strong uptrend on Boeing. Boeing has finally come out of the 218.80 level. I like what I'm seeing here. There's a daily again. Now you might see up here this profit margin is negative 16.58. Their operating cash flow is negative $10.3 billion. I like to throw some of the fundamentals up here just so I can kind of get a sense about the company, where it's at. And right now, from a fundamental perspective, not so great, but there is a lot of demand for this. Why? Because it has dropped in price so much from its highs over here of $449 or so was the highs. Okay. It's down to $226 a share, and it's starting to show some, there's more interest in this right now. Charles Schwab, also on the weekly chart, broke this 89.85 level. Well, that's a daily chart. That's a daily level right there from that candle. So that was from May 20th. You can see how it was consolidating for a little while in this little range here. Broke through it, and boom, it's expanding now. And hopefully we'll expand some more. So I like this one too. Looks good. URI is United Rentals Inc. Here's a weekly chart. Just recently, 2 weeks now, it's broken through the Ichimoku cloud. The cloud itself, the future cloud, is starting to become bullish again. What do I mean by that? There, the Senkou Span A is crossing above the Senkou Span B, the purple line. So we're right in the beginning stages of this thing potentially taking off, in my opinion. You can see the strength here in these last 3 days. A lot of positive volume down here. ADX is moving up. That's the white line. It represents momentum. The green line is above the red line. All of that tells me there's a higher probability that this thing is going to continue. Here's a daily chart. Very strong uptrend right now. So I like URI. RSP is the Invesco S&P 500 Equal Weight ETF, and this one looks pretty good too on the daily chart and on the weekly. Okay, we've got everything looking strong. If you're wondering what that white line there is, that's the Chikou span. That's the closing price projected 26 periods ago. And if that white line is above the candle 26 periods ago, then it's bullish. If it's under, like it was over here, it's bearish. DAL is Delta Airlines. Delta Airlines on the weekly chart is stalling at the top of the cloud here. But it has had a nice little move up, high volumes. Things are starting to look pretty bullish. It might next week get above. I wouldn't be adding quite yet, though. You'll also notice the Chikou span. That white line I just talked about is currently still under the candle. So you don't have confirmation on the weekly. Therefore, it does not get that blue check that I like to throw on these. On the daily, though, you can see that it's also stalling at that 56.73 level. Look at that, a couple of reversal candles right there. Once it got above that 200-day moving average on the daily chart, it's stalling. Financials has pulled back a little bit. XLF, all right there, you can see that down 1.04%. It's under the 9-period moving average right now, so I would not be adding here on this ETF. QCOM has also pulled under the 200-day moving average, and the moving average is here, the Tengen-sen. So that one's pulling back a little bit, down 1.02. ZBH was Jenny Harrington's final trade. That one's under the Ichimoku cloud on the daily. That's a big no-no to add a position here. You can see that it basically came into the cloud, developed a spinning top reversal candle, and then dropped. So we don't have anything here to go with. That's the daily, and here's a weekly chart. Still in a very strong downtrend. And if you can pick bottoms, good luck to you. It's impossible to do that, really. One might have thought, okay, you know what? You could go back in time and say, hey, this looks like it's bottoming out right here. I think I'm going to buy it. And yeah, it might be a short-lived little move up. And it was. It was a short-lived little move up. Basically, it makes more sense to wait for confirmation when price gets above the Ichimoku cloud and the 200-day moving average. You're going to have a higher probability trade at that point. All right, let's look at Citigroup. Citigroup on the weekly chart looks very strong, and on the daily chart as well. This is a position I just closed on July 7th. I had shared this trade with members on June 24th and closed out of it. I talked about that in the members video. It has pulled back. It's pulled back after that reversal candle right there, and now it might get a little jump here and pop back again. It's very normal for price to make these moves up, then pull back, and then continue. But you never know if that's really going to happen, right? So I'm out of that trade right now. I took the 10.2% profit. LMT is Lockheed Martin Corporation. This one's just, nothing to do here really. It's inside the cloud. You can see it's in a very, very long, since April here, consolidating in this little region here. It's still under the 200-day moving average. No thanks on that one. And XLV is healthcare. That's inside the cloud. No on that. All right. Netflix has dropped. It got into the Tengen-sen, Kijun-sen here. It got under on Monday, July 7th, and it's continued to drop. Okay, down 0.44%. No on this one. ETH is Ethereum mini trust ETF. So this is a way to invest in Ethereum, and kind of like IBIT, for example. And you can see here in the daily chart, it's broken through some levels. 2706 has been broken. It's doing pretty well, just like Bitcoin. You can see the high volume coming in. The only reason I have not added this with a little blue flag here is because on the weekly chart, it's still under the cloud, and Chico Span is still under price. If you can get confirmation on 2 time frames, you'll have a higher probability trade, basically. All right, Walmart is under Tengen-sen. No on that one right now on the weekly chart, just because of that. And on the daily chart, it's inside the cloud. JP Morgan, here's one that I added back on May 13th. Closed out of this one on June 30th last week for an 11.3% profit. It moved up a little bit more after my after I closed out of it. It did move up slightly, but then it's dropped now. So it's under the Tengen-sen still. It's not a go quite yet. All right, and then Mag 7, these 3 stocks. Let's look at Google. Google is starting to show more and more strength every day here. You can see these last 3 days, it's moved up 1.45% on Friday, but it is still stuck under this level of resistance. So I'd hold off on that one. Plus, on the weekly chart, Tengen-sen is still under Kijun-sen, so you'll have to take that into account. The cloud itself is still bearish as well on the weekly. Okay, and Chico Span is still under the price, the white line. What about Tesla? Here's Tesla on the weekly chart. This one pulled back. It gapped down in the morning. I'm sorry, I take that back. It gapped down on Monday, and then throughout the week it was moving up, but stalled at the bottom, bottom of this cloud here. So that's kind of found a very strong level of resistance, obviously. Here it is on the daily chart, under the 200. So I would not be jumping into Tesla quite yet. It needs to prove itself still. It's in a downward trend. Apple, just a lot of sideways action here, even though it's above the cloud. You can see a lot of crisscrossing happening here with the cloud. Cinco Span A crossed above, then it crossed under, crossed back above. There's no real true trend here, and it's still under that declining 200-day moving average on the daily. And on the weekly chart, it's stalling right under the cloud. So no on Apple. No, thank you. And that, my friends, will do it for this video. I hope you enjoyed it. I hope you guys learned a few things about technical analysis on this show. And consider supporting this channel. And the best way you can support the channel is by becoming a member. You can subscribe for free, but then if you want to access these member videos, you have to hit the subscribe plus button again, and then it will bring up this little box here, and then you can either become a Blue Cloud supporter, a Blue Cloud trader, or Blue Cloud Legend level member. Okay, and there's different options here. So Blue Cloud Trader, you'll get access to those member videos only, but under Blue Cloud Legend, the highest level, you would also, in addition to getting those member videos, you can request 3 stocks or ETFs be analyzed each week. You can request, you can see some of my day trading videos that you won't find under Blue Cloud Trader. And you will also have access to the daily trade updates. So if I'm closing out of positions, I'm sharing that daily. What happens is you'll become a member. Once you become a member, a new tab will pop up here next to posts, and it will look like this. It will say membership. And then you'll be able to see the posts that I place in there on my trades. Okay? Anyway, that's it. Thanks for watching. I will catch you all in the next video.